Welcome back to Investing Talk Podcast. Today we're doing a deep dive into a company that's been making some significant ripples in the biotech sector, plus Therapeutics. Here on the deep dive, our mission is really to cut through all the noise, sift through the complex information, and just deliver the crucial insights you need to truly understand a topic. Think of us as your personal guides, helping you get well-informed quickly, maybe with a few surprising facts, and hopefully a bit of humor to keep you hooked. And before we get started, if you're enjoying these insights, finding value in what we do, please remember to subscribe, like, and comment on this deep dive. Your support really helps us keep these explorations coming. And if you're feeling extra generous, maybe consider buying us a coffee. It definitely helps fuel our research into these fascinating companies. Okay, let's unpack this one. Plus Therapeutics. It's a clinical stage pharmaceutical company, which right away, that gives you a pretty strong hint about its current financial profile. But some recent developments have really put it squarely in the spotlight. We've seen some genuinely significant price movements just lately.
Yeah, what's truly interesting here, I think, is how much this company embodies that, high risk, high reward nature of early stage biotech. But there's a twist, a very recent, crucial strategic shift that could really redefine its path forward. We're looking at a company focused on an incredibly challenging area. I mean, really tough, central nervous system cancers.
Okay, when you say challenging area, what exactly makes it so? And who exactly is Plus Therapeutics? What do they do that puts them in this high-stakes environment?
That's a critical point. Treating cancers of the brain and spinal cord, it's notoriously difficult. You've got the blood-brain barrier, right? It protects the brain, which is good, but it also stops many drugs from actually reaching the tumors effectively. So Plus Therapeutics, they're a US-based company, headquartered down in Houston, Texas, and they specialize in what's called innovative targeted radiotherapeutics. Their core focus is developing treatments for these really difficult-to-treat cancers. Think aggressive forms like glioblastoma, leptomeningeal metastases, and importantly, they're also expanding into pediatric indications. That's a huge unmet medical need right there.
Targeted radiotherapeutics for CNS cancers. That sounds incredibly complex. And like you said, a huge unmet need. Can you give us a maybe clearer picture of what that technology actually involves?
Absolutely. Think of it this way. Traditional radiation often uses external beams, right, that can damage healthy tissue around the tumor. Targeted radiotherapeutics, on the other hand, use radioactive isotopes delivered, ideally, directly to the tumor site, or specifically to cancer cells. They often do this by attaching them to a molecule that preferentially binds to those cancer cells. The whole aim is to maximize killing the tumor cells while minimizing damage to the healthy tissue nearby. It's precision medicine really taken to an extreme.
Okay, so it's about delivering a highly localized, very powerful punch right where it's needed most. And how does a clinical stage company, which, by definition means no products on the market yet, how do they manage to pursue this kind of cutting-edge capital-intensive research? Do they operate like the big pharma giants?
Oh, not at all. And that's where their operational model is interesting. They leverage advanced platform technologies and use what they call a hybrid virtual drug development model. It sounds fancy, but it's basically to enhance efficiency and control costs. So, simply put, instead of owning massive labs and employing thousands of researchers, they run with a lean internal team. And they outsource large parts of their R&D, clinical trials, even manufacturing to specialized contract organizations.
Okay.
This lets them be more agile, more capital efficient. They avoid those massive fixed costs you see with traditional pharma giants. And that's essential for a company at their stage.
Yeah, that makes a lot of sense for a company without commercial revenue coming in. So what are their specific key products in development that are using this model?
Their lead candidate is called REYOBQ. That's the targeted radiotherapeutic currently in clinical trials for these tough CNS cancers. But they don't just focus on the therapy itself, which is interesting. They also have something called the CNSide assay platform.
CNSide assay platform.
Yeah, and it's equally important. This platform is designed to support diagnosis and monitoring in CNS cancer treatment.
Okay, and what does that CNSide platform actually do? How does it help with diagnosing or monitoring?
Right, so the CNSide assay is critical because it gives doctors a really precise tool. It lets them analyze cerebrospinal fluid so they can detect cancer cells or specific biomarkers early, monitor how well the treatment's working, kind of in real time, and potentially it could even help personalize therapy for patients with these really challenging brain and spinal cord cancers. It's almost like having a highly sensitive radar, helping clinicians guide and assess their treatment strategies much more effectively. That's a huge step forward in a field where getting that real-time feedback is often quite limited.
That is a crucial point. It's not just the drug, but the whole diagnostic and monitoring ecosystem around it. Now, when we talk about a clinical stage company, that immediately flags certain things on the financial side.
Yeah.
How does Plus Therapeutics' financial picture look, particularly given they're focused on such, well, high-cost R&D?
You're right to connect those dots. This company, like many in its stage, has no reported commercial revenues, not as of their latest quarterly filings in Q1 2025 anyway. Their operations are primarily funded through equity financing. That means issuing new shares, not product sales. So over the past 3 to 5 years, revenue growth has been, well, negligible. It's entirely due to being pre-commercial.
So naturally, no revenue means negative earnings. What does that look like specifically for them?
Precisely. For the fiscal year ending December 2025, the consensus earnings per share forecast is negative 0.34. Now, while that's still a loss, what's interesting is that this is actually an improvement from just last month's estimate, which was negative 0.67. It suggests maybe some progress in narrowing those losses, perhaps better cost control or more efficient trial execution. But important to remember, it's still a loss.
Right. And metrics like price to earnings or free cash flow, are they even relevant here for investors trying to size up the company?
Not meaningfully, no. And that's a common tripping point for newer biotech investors. They don't have a meaningful PE ratio because of the persistent negative earnings. And there's no positive free cash flow reported. In fact, they're burning cash to fund their research and development.
Right.
Their return on equity is also negative. This is all very typical for early-stage biotech firms. You can't really compare them directly to profitable industry peers using these metrics. For companies like Plus Therapeutics, their value is less about current revenues or traditional earnings. It's much more about the potential locked up in their pipeline and the strategic moves they make to keep that development going.
That's a really vital distinction for investors to grasp.
Yeah.
Okay, so you mentioned earlier a crucial twist that could redefine its path. What's the important financial development here that goes beyond these typical pre-commercial financials?
Okay, so if we connect this to the bigger picture, the really significant financial news was a major capital restructuring they announced back in June. This was a very strategic move. It was designed to drastically reduce the dilution risk hanging over them from previous financing rounds. And they did this by canceling up to about 1.5 billion potential shares stemming from warrants.
1.5 billion potential shares. That sounds like an enormous number. Can you maybe break down what warrants are and why canceling that many is such a significant step?
Absolutely. It is a huge number. Think of warrants as basically an IOU for future stock, or like an option to buy shares at a set price down the road. They're often issued as sort of a sweetener alongside other financing deals.
Yeah.
The problem was, if all those warrants were eventually exercised, it could have just flooded the market with 1.5 billion new shares. That would significantly dilute the value of every existing share someone holds.
Right, waters it down.
Exactly. So this restructuring effectively removes that massive overhang. It takes away that looming threat of future dilution. It's a really significant step toward improving their capital structure stability. And it signals to existing shareholders that the company is serious about preserving their value. It makes future fundraising less painful, if and when they need it.
So less dilution risk for future capital needs. That is huge for investors in a company that, let's face it, will almost certainly need more funding down the line as trials progress. And what about their current cash position after these recent activities? Where do they stand now?
Their cash position has improved following some recent financing activities, and management reports that they have sufficient runway now into late 2026 based on their current burn rate.
Okay, late 2026.
Yeah, so that provides a level of near-term stability. They will undoubtedly need more capital down the line, to complete trials, move towards commercialization, but this gives them a pretty solid operational buffer for the next couple of years.
That near-term stability is certainly a positive for investors, especially given the inherent risks we've talked about. Okay, moving beyond the financials now. How does Plus Therapeutics position itself within the broader biotech industry, especially in that highly competitive CNS oncology space?
This raises a really important question about their competitive advantage. Their edge lies squarely in their proprietary drug delivery platforms and, the potential intellectual property around their specific targeted radiotherapies. However, it's crucial to understand they are still considered a challenger within their sector. They face larger competitors who are much further along in commercialization or just have more extensive development pipelines.
Can you give some examples of those larger competitors, and how do they differ from what Plus Therapeutics is trying to do?
Sure. You have companies like Novocure. They already have an FDA-approved device, Optune, for glioblastoma, but that's a very different approach. It uses electric fields to disrupt tumor cell division, not radiation.
Different technology entirely.
Right. Then there's Xiopharm Oncology. They have multiple pipeline assets focused more on gene and cell therapy in oncology. Again, different focus.
Uh-huh.
So plus Therapeutics, while it's lagging commercially compared to someone like Novocure, it differentiates itself with its novel radiotherapeutic delivery platforms, specifically targeting those really hard-to-treat brain tumors. And of course, their capital-efficient operating model we discussed. They're carving out a distinct niche with a different approach.
So they're not going head-to-head on the exact same technology, but they are aiming for the same incredibly challenging diseases. What are the key industry trends and, maybe more importantly, the risks they're navigating in this high-stakes environment?
Well, on the growth side, we're definitely seeing rapid advances in radiotherapeutic technology overall. That's a tailwind. And there's an increased focus on rare CNS cancers, really driven by those continued unmet needs. But the risks, as you noted, they are substantial. There are immense regulatory hurdles for novel therapies. The FDA approval process is notoriously rigorous, long, and frankly carries a high failure rate. Then there are the just plain high R&D costs without any guarantee of approval. Clinical trials are incredibly expensive.
Yeah.
And finally, you have rapid technological shifts. Today's breakthrough could potentially be superseded by tomorrow's innovation, which adds another layer of risk to those long development cycles. These are just inherent realities of the biotech space.
So a field that's both incredibly challenging and potentially immensely rewarding, where a single breakthrough could redefine patient outcomes and company valuations. This brings us to where it gets really compelling right now. Today, June 26, 2025, is a significant day for Plus Therapeutics. What exactly is happening, and what has the market reaction been leading up to it?
Right. Today, there's a highly anticipated business update and conference call scheduled. This event is expected to provide some key insights into the company's progress on its CNS cancer radiotherapeutics pipeline and their overall business strategy. Crucially, investors are looking for updates on their lead candidate, REYOBQ, and any strategic milestones that could impact its path to market.
What specific insights are investors really hungry for from this update? What are the potential catalysts that could really move the needle here?
Key points would be progress reports on REYOBQ's clinical trials. Are they hitting milestones? Is the data looking promising? That's number one. Investors are also keenly awaiting any potential FDA clearance news or even just updates regarding their pediatric trial initiation, which, as we discussed, addresses a massive unmet need and could open up a significant new market opportunity for them.
Right, the pediatric angle.
Exactly. And beyond the clinical updates, strategic milestones related to, say, supply chain development for future commercialization are also critical. A drug needs to be manufactured reliably and distributed effectively. A clear path there is vital.
And the market has certainly reacted to this anticipation. Quite a dramatic move, wouldn't you say?
Oh, absolutely. Ahead of today's update, the stock reportedly surged by up to 100% in recent trading sessions.
Wow, 100%.
Yeah, this spike seems directly linked to investor anticipation surrounding possible positive news from this update, and maybe some speculation about regulatory advancements. Trading volume has also increased significantly, which indicates a lot of buying interest, a lot of attention on the stock. However, it's really vital to caution that this kind of surge, purely on anticipation, can be incredibly volatile.
Indeed. 100% surge on anticipation alone is pretty significant.
Mm-hmm.
What's the sentiment among analysts, and what about social media? What should our listeners be watching out for in this kind of scenario?
Well, analyst sentiment seems to remain speculative, but I'd say cautiously optimistic. They're generally maintaining neutral ratings, basically waiting for more concrete data from the call itself. On social media, places like X and Reddit, investor chatter has definitely surged. Lots of posts speculating about breakout potential.
I bet.
But it's a double-edged sword, right? Many experienced investors are cautioning that this optimism is largely rumor-driven until the official details emerge after the call. The danger is if the news isn't quite as positive as speculated, or if it's simply a reiteration of stuff we already know, we could see a pretty rapid correction downwards. For you, the listener, it's really about separating the signal from the noise, waiting for the actual facts over the forum chatter.
Good advice. So, putting it all together, what does this mean for Plus Therapeutics as we look at the big picture? It seems like a compelling example of a clinical stage biotech operating in a high-impact but undeniably high-risk area.
They certainly offer exposure to some promising innovations within CNS oncology, no doubt. And while they absolutely remain high risk because they're pre-commercial and so reliant on positive clinical outcomes, their improved cash position and, critically, that recent capital restructuring do provide a level of near-term stability. The market is clearly eagerly awaiting the catalyst from today's business update. It seems to be pricing in a certain level of optimism already.
Right, so upside potential clearly exists if these catalysts deliver favorable results, especially regarding those pediatric markets we mentioned. But the downside risk definitely persists until commercialization becomes more certain and those revenue streams start to flow.
Exactly. For you, the listener, I think the key takeaway is that for companies like Plus Therapeutics, their value proposition is less about current revenues and traditional financial metrics. It's far more about the potential of their pipeline and the strategic moves they make, like that restructuring, to sustain development and de-risk the path forward. That June capital restructuring is a perfect example of a non-clinical development that significantly impacts their investment profile even before we get any new trial data. It was crucial.
This raises an important question then. Beyond today's immediate news and the resulting stock reaction, what long-term indicators will truly signal a fundamental shift for Plus Therapeutics? Is it just the trial results hitting positive endpoints? Or is it successfully integrating that supply chain and manufacturing piece for a future product? Maybe securing key partnerships. What are you watching for in the months and years ahead as this story unfolds? If you want to dive deeper into Plus Therapeutics' specific financial figures or review their official disclosures yourself, remember you can always consult their most recent quarterly report, the 10Q, and their annual report, the 10K. You can find those via the SEC EGR database or check financial portals like Yahoo Finance for real-time valuation ratios and news updates. That's our deep dive into Plus Therapeutics for today. We really hope this has given you a much clearer, deeper picture of this fascinating and definitely high-stakes company.
Stay curious, everyone, and we'll unpack another topic for you next time.